Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, February 13th. Hope you guys having a great day so far. Hey, we got just basically one item here with two components for the economic calendar here. We got the CPI, which is the Consumer Price Index for the month of January. So the previous month, from November to December, went down 0.1%. Forecast for this month was supposed to be going into January, was supposed to be increase of 0.1%, and instead it actually remained unchanged for the month of January. But however, if you look at the year over year, the headline number basically went down from 1.9% down to 1.6%. A lot of this has to do with the oil prices coming down a bit. So this is what's kind of helped out the consumer price index. So when you take out the food and energy uh, from it, we get what they call the core CPI. This is really what the Fed will look at because those variables, there's no control over it. So they like to look at more of the core. So from November to December, it went up 0.2%. Forecast is supposed to continue that same trend at 0.2%, and it came in right at expectations here. So, however, its year over year basically just remained unchanged. So it stayed at 2.2% here. Again, the Fed's favorite gauge for inflation is the PCE, but they do look heavily at the CPI as well, and it is it weighs a lot on when it looks in terms of these data here. So again, it's it is in the range of what the Fed is looking to keep inflation at 2% range. It's slightly over, but it's in that same range. It's looking a little tame, and the forecast for 2019 is, if anything, inflation may come down a bit. So that's the good news from that point. So if we see inflation going up, that's the reason why they raise interest rates to stave off inflation to get out, so it doesn't go out of control here. So let's kind of jump ahead here to the headline news. Stock market's up. It's taken its cue basically from the geopolitical here, from that tentative agreement that was mentioned yesterday. Part of it was that it's the president isn't exactly happy with it, but they're saying that it's unlikely that a government shutdown will be a result of it and may be moving forward. So that's the good news. We might be averting a government shutdown. That's the last thing I think either party wants to see what happens, as innocent people are basically affected by that. And all of us are, even the consumers are being affected in one way or another. But also another item here is the U.S. trade optimism is growing. There was a report coming out that President Trump had softened on the stance of a hard deadline. They're saying that the deadline will be March 1st, but if we are close enough to an agreement, the reports coming out that he may soften on that hard date it may extend it a little bit. So if it's close enough, so which is obviously good news, and they're liking that stance that he's not going to be hardline into it. And as we reported yesterday, people like Mnuchin and as well as Lighthizer are over there and are expected to be meeting next week. Or I'm sorry, not next week, tomorrow, Thursday, to be meeting with the higher ups over in China as well, as they are continuing with their whole week of trade negotiations here. So we'll see by end of this week if we have anything out of it yet or not. Hopefully, fingers crossed that things develop and we can move forward, have that one off our plate. Also today, and of course this whole week, is we got several Fed members speaking out there. Nothing's erupted the markets yet, so that's a good sign. So it seems like they're kind of keeping along what we've already known, the sentiment, so nothing out of the ordinary. And last but not least, we got oil. Oil prices are going up a little bit. Saudi Arabia announced that they are going to cut production again and bring up the prices of oil on a global level here. So let's see how this is affecting bond market. Bond market is down. It's testing its floor of support right here, which is the 25-day moving average. We're down about 14 basis points, which translates to higher mortgage rates, interest rates here. So of course that's the drawback. So we'll see if it can stay above this. We're starting to get to a point where it's a double floor of support here. So we'll have to kind of wait and see if that can hold or not for the day here. On the Treasury side of things, we're testing its ceiling of resistance here. We're pushing up above it. We're right at about the 271, 272 level right now, and it's what's adding pressure towards mortgage-backed securities and making interest rates rise. So if we can keep that ceiling intact, it will help mortgage-backed securities a bit further here. So again, interest rates so far a little bit higher today compared to what we were yesterday. And if anything else changes, I'll post on Twitter. You can just find me at Mike Bjork on Twitter. Feel free to follow me there. And anything comes up, I will post over there as well. All right, you guys have a great rest of your day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.